Hey, thanks for joining me in today's video. And what I want to share with you in this episode is basically two main tips on how to not freak out when the market is tanking and give you some insight on how to deal with these things. All right, so let's take a quick peek at these things. And if you want to, of course, learn many more other things, feel free to check out our website at tradersfly.com. There's a lot of great links there in the description. So check those out. Check out the courses, freebies, coaching resources, and much more. All right. Let's cut to the chase. You probably want to get to know these things. Well, freaking out when the market's tanking? Well, there's two main things to look at least from this video. There's other things, of course, that you can do, but number one, trade smaller. If you're trading smaller, you're able to handle and withstand the market moves. So if instead of trading, let's say 10 contracts, you might want to go to trade 3 contracts. And now all of a sudden, when the market goes against you, well, it's not as bad, not as nasty, and you're able to sustain the position. And number two, have bullish and bearish positions, right? So when you have those bullish positions, if the market's tanking, make sure you have some bearish positions in there as well. Now, if you're a little more advanced, you could also have some non-directional positions. Those are also great. So if you know how to trade, let's say, iron condors or calendars or butterfly spreads. So all these are nice added things that you could go ahead and learn to work through theta, not just a directional basis, but they're just a different complement to what you're doing on the trades. You can check out some of the courses that we have available on, let's say, iron condors for non-directional trading, and even some other things on, let's say, calendars and butterflies and much more. So I definitely check those out. But this is really the kind of the core is number one. I see a lot of people when I do the coaching, they trade a little too big. So trade smaller. Instead of 10, do 3. Instead of 500 shares, do 100 shares. That'll allow you to sustain the moves. And number two, have some bearish positions that offset the bullish positions. And that'll just keep you out of harm's way a little bit more so. If you take a look at kind of, here's the portfolio. I work with some clients. Sometimes I just put on some random things for them. So if you look at this portfolio, one of the things that I have, you can see this just kind of has shares. It's just easier to maintain for me. And then we discuss and play around with those. But I've got 200 shares here, a negative 1,000, negative 285 here, negative 100 here. And then here's some of the positive ones. And then here's a negative 400. So you can see I've got some bearish positions here and I've got some bullish positions here. And all the ones that are profitable today, which is a big down market day. So just to give you a little perspective, the market's been tanking. It's down about 45 points today on the S&P, or down 2 days in a row. But it gives you a little bit of a rough idea that, look, this one is making me $2,600, whereas the biggest one, losers, actually down $1,800. That's a bullish position. Now I have more bullish positions, obviously, than bearish, and that's why this is still down in the negative. But look, that keeps you, you know what? Look, this one's at least making money. Whereas like everything is going to be red if you had like everything just about in that one spot, or everything bullish. So this kind of helps keep your mind at check. So if you got 10 positions, let's look at it like this. If you've got 10 positions, and we'll go in, well, if you're bullish and you got 10 positions and you want to be normally bullish, well, you might have 8 out of 2 positions bullish. Well, if you're somewhat bullish, you might have 6 out of 4 positions bullish. You know, if you're kind of balanced, you could have 5 out of 5, you know, and just have some bullish, some bearish. So my point being is that you could balance these things out depending on your situation and depending on your opinion on the market or how you want to structure the portfolio. But the point is having a mixture of those will help. Also, trading smaller will help, because that means when the move is against you, it's not as nasty or not as big. So that's what you're trying to do is, hey, understand, look, hey, you're taking a large cut today. Well, yeah, maybe you've got positions that are a little bit too big. Now in this account or this portfolio, you know, the total from these gains were, I think, 78,000 on that paper account. Again, paper account. But point being is like, look, today's day is nasty and it's a $7,000 down day. But if I didn't have these other positive ones, it'd be a little bit bigger, more around the $9,000 or $10,000 range. So my point being here is that, you know, having those mixtures does help to construct that portfolio. And these are kind of just 2 tips to give you some insight on those things. So I hope that helps. And remember, there's many more things to learn. Just check out the website. There's a lot of good freebies in there. You could download all our freebies that we have. Check that out. download all freebies there, and a lot of things in the coaching area too, if you're trying to go ahead and figure out how to learn some of this stuff. So thanks for joining me. Truly appreciate it. Hope these tips and insights help you a little bit more, think a little more clearly about your trading, and maybe I'll get to speak to you sometime in the future. Thanks again, and I'll see you next time.